Hello everyone. Edelweiss Small Cap Fund approach towards investments is to pick businesses which have relatively faster earnings growth, robust business model, good corporate governance, and acceptable valuations. This is in line with our overall FAIR framework, which helps us filter from almost 400 to 500 names to 150 investable ideas. Further, we select the best names from this investment universe, which becomes a part of your portfolio. Small and mid-cap offers a lot of alpha generating opportunities, but what is most important thing is to separate good managements and businesses from the bad ones. We strongly believe that our emphasis on forensics and earnings quality within the FAIR framework helps in avoiding or reducing some of the costly mistakes. Portfolio returns are not only a function of earnings growth, but to a large extent dependent on quality of earnings as well. Small Cap Fund is a sector agnostic and is a well-diversified fund. At current juncture, we are overweight on themes like housing recovery, pickup in private capex, and China Plus One. A lot of opportunities are also available on the consumer discretionary side, which ranges from automobiles and auto parts, restaurants, and apparels. Almost after a decade of lull phase, housing sales have started to increase. Apart from the wealth effect that we have seen, fundamental factors which is driving this is the income levels which have improved in last 5 to 7 years. On the other hand, the cost of buying house has remained the same or has decreased. This has significantly improved the affordability of buying homes. To capitalize on this opportunity, we have companies which are direct plays as well as companies which are indirect beneficiaries, like companies in the building material space, cement, and housing financiers. Another theme that we like is China Plus One. This started in 2015 with China becoming more stringent on polluting industries like chemicals. It has further accelerated as customers want to diversify out of China. India has become a destination of choice for these customers as India always had the competence to manufacture specialty grade chemicals. Given the size of China's chemical industry, a small shift from China could mean a big swing in the revenues for Indian companies. This is what we have been seeing in the past and will continue to see in future as well. During last quarter, we have added a company which is into rubber chemical space and another company which is into soda ash business. Both these companies are market leaders in the chemicals that they are present into. Rubber chemical company is witnessing strong traction in revenues due to overall demand supported by capacity expansion that they have done in the recent past. With the bottom of the cycle margins, we expect strong earnings growth over next 2 to 3 years. Another company which is into soda ash is expected to see good earnings growth led by the global demand supply mismatch in the soda ash business. As per our understanding, globally there is no planned capacity expansion in soda ash over next 2 to 3 years. However, soda ash is finding more use cases in emerging segments like solar panels and EV batteries, which is creating demand supply mismatch. We have also added company in the auto component space after it got separately listed due to the demerger. The auto component company has pole position in the wiring harness business with strong relationship with its Japanese technology partner. As consumers buy more premium cars with more features, safety and lower emission, requirement of wiring harness will continue to go up. Also, electric vehicles will require more content of wiring harness as compared to the traditional ICE engine. The company will also benefit from the auto recovery. Most of the performance attribution that we see over last 1 year has come from bottom-up stock selection rather than sectoral allocation. This ties up with our philosophy where we are more oriented towards stock selection. Over last 1 year, sectors which have contributed to the performance are industrials, pharma, automobiles, and IT. Happy investing.
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.
Visit www.edelweissmf.com